Hey guys, welcome to the best trading channel. Today I'm gonna teach you the differences between support and resistance, liquidity levels, and the zones so that you can make a lot of money understanding these concepts. Okay, let's go. Hey my friends, welcome to the channel. I'm Aldrich and this is my channel. In case you haven't subscribed yet, this is absolutely the best trading channel in which I constantly upload videos and I give a lot of value, okay? Okay guys, so I hope you're ready for this video because I'm about to drop a lot of knowledge, okay? So you can start applying these concepts immediately, okay? We're gonna review the differences between the support and resistance, the zones, and liquidity levels, okay? Let's go straight into the charts. This is my account. As you can see, this is real. I'm not affiliated with any broker, okay? So these are my results. So you can see everything works, okay guys? Just make sure to have the right mindset and everything will fall into place. So I want to talk about this because constantly I see new traders getting confused by these three concepts, right? Like you hear a lot about liquidity levels, you hear a lot about supply and demand, you hear about the zones, support and resistance. So maybe you are confused and you're like wondering what is the difference between, okay? So today I'm gonna dissect exactly what is the difference, okay? And so that you can, and remember guys, very important to keep your charts clean and keep your trading as simple as possible, okay? So first concept is support and resistance, okay? This is the most basic and simple price action tool that you can start drawing into your charts, okay? Okay, so first, I'm gonna explain what is support and resistance. You're gonna have a level that is constantly being tested by candles, especially if they are the bodies of some candlesticks, okay? Also, this is the resistance and it gets rejected, okay? So also, as soon as you have one candle like this and then an opposing candle, that's gonna be a support and resistance. So basically the time frames, they're gonna depend, that's up to you because there's some swing traders, there's some scalpers, but as long as you can identify the major levels in your chart, I like to use 30-minute chart, 1 hour chart, maybe sometimes 15-minute chart. And obviously my entries, my trades, they're gonna happen in lower time frames, okay? But I'm gonna go a lot into details about the execution. If you want to learn more about that, obviously I do have an online course. You can check the link below, okay guys? So let me draw, this is an example about gold. This was actually today, okay? So what you can see is price has been testing this level, okay? So this is around New York session. So immediately you can see that price was testing this level. As you can see, you have 1, 2, and 3 times, okay? So immediately when you see a reaction of price, that's a support, okay? So remember what I said, when you see some candlesticks going into one direction and suddenly you see an opposing candle, 2 opposing candles, 3 opposing candles, now that means price is reacting into this zone, okay, into this level or support and resistance in this case, okay? So now how do you draw it? Well, you can use the body of the candles to the wick, okay? Honestly, I have to tell you this, but this is not an exact science, guys. This is the market in which banks and institutions are making their operations, they are making their transactions, and the only thing they care about is having a good price of whatever they are trading, okay? Because think about it, you trade on your own, right? We, the little investors, we are called retail traders, okay? Now, the big fish, they are banks, governments, institutions, hedge funds, okay? And obviously, the only thing that they care about is having a good price, okay? Because they are transacting, they are trading with hundreds of millions of dollars, okay? So every little pip or point or move represents hundreds of millions of dollars, okay guys? So in this example, as you can see, price was tested 1, 2 times, and now in the future, whenever price comes back, you're gonna be looking at it, okay? In this case, price was just ranging, okay? We have a range, as you can see, okay? Now look above, and also we have a resistance being created. Why? Because we had this pretty big rejection. Okay, actually, if we extend it to the left, you can see that we had some support right here. Okay, because we had a reaction, price broke through, and now in the future, you're gonna have your attention to whatever happens here. Now, obviously, as a tip, you're not gonna take buys close to a resistance. Okay, guys, so think about it as a wall. Like, think about price being like in the video games, like Mario Bros or whatever, and it's gonna be difficult to break through a wall, okay? Unless there is a breakout and then a retest, okay? So it's also like a ball that it's bouncing from one wall to another, from the ceiling to the floor, okay? Now, also, as you can see right here, look to the left, you can see that price reacted to the same level or support that we had previously, okay, some hours before during London session. Okay, guys, so this is an example of basic support and resistance level. Obviously, as I said, there's gonna be major levels, like more important levels than others. So as you can see in here, right in the middle, we had some other minor resistance. Okay, so as you can see, this was at the 50% between this resistance and the support. Okay, guys, so as you can see, it was also important. So if you're a scalper, maybe you could have taken advantage of these little pushes right here. So for example, you could have taken some sales, okay, and your stop built like above. And as you can see, you had some pretty decent pips, about 25 pips. This is gold. Okay, so remember in my previous videos that I said like you don't need like a huge moves to make money. Okay, this is the day before. Okay, this is in gold. Also, this is 5-minute charts. So as you can see, guys, price reacted to this level. Okay, to the left. Okay, as you can see, price made a little like fake out. It's not gonna be, as I said, guys, it's not gonna be super clean. Okay, that's what I mean. So don't try to worry a lot about how to draw it exactly. As I said, you can like, this is very relative. It's matter of you like playing with your zones. Okay, and as you can see, I draw it from the body of the candle up to the wick. Okay, so all of this is gonna be your support. Right here, price reacted. Okay, it was coming back down, and remember what I said, like if you have opposing candles and then a bullish candle in this case, right, you see a reaction. This is a pretty significant amount of pips. Okay, so you know that in the future, whenever price comes back into this area, you're gonna have a reaction. Okay, so in this case, price came back down and immediately rejected that same support. Okay, and right above you, as you can see, we have the resistance. Okay, guys, so as you can see, just try to keep it like super simple. Okay, this is actually more of a zone. Okay, because this candle was the last bullish candle before this drop, and as you can see, it reacted perfectly. Okay, and in here, price broke, retested, and came back up. Okay, and obviously, yeah, eventually price just dropped and it made a fake out. That was a liquidity grab, which we're gonna talk about that in a second. Okay, now that we are in this same example, let's talk about liquidity levels. Okay, now liquidity levels, I like to draw them with a simple line, just like this. Okay, now the difference between support and resistance, let me actually delete it so that you don't get confused, is that liquidity levels usually are going to be the lows, highs of the day. Okay, and above and below those areas, there's going to be a lot of pending orders. Okay, stop losses especially. And as I said before, these banks and institutions, they want to get the best price. Now remember that all of these little orders from retail traders, they represent, it's basically like gas, like fuel for price to continue going into the opposite direction. Okay, so remember we were talking about like a video game, right? So imagine this is kind of like basically it would be like energy for price to continue going up into the opposite direction. As you can see, guys, we had a pretty significant move up. Okay, and after a liquidity level, we're gonna have a fake out. So that's basically the difference between support and resistance and a liquidity area. Okay, that in a liquidity area, it's gonna pierce through. So you're gonna see like a fake out or like a huge wick. Okay, so that means that price made a liquidity grab and now it's gonna go into the opposite direction. Also, in this one, in this example right here that you can see, this was also a fake out, okay, because we had these highs, okay, and the resistance was not respected, but at the same time is faking out a lot of buyers, okay. So that is a difference. Like support and resistance should be respected, okay, guys. So that is the difference. You can see in this picture we have both support and resistances, and as I said, support and resistance, it should be respected, okay, but liquidity levels, they're gonna make a fake out, okay. It's gonna pierce through and then it's gonna go into the opposite direction. Guys, the information that I give you, like not even like those billion-dollar gurus from Miami, they're not giving this information for free, okay, guys. Like all of this information I'm giving you like this for free, so I hope you really value it. I just want to take a moment, guys, to show you this is my website. In case you want to learn more, become a better trader, you want to improve, if you want to have like better systems that work, if you still haven't found consistency and you want to improve, you want to make a lot of money, this is my website, okay? This is inside my course, okay? I have a lot of strategies, a trading plan, okay? You have contact with me, all of them, they have like very, very high win rate and they have been proven and been tested with statistics for more than 3 years by me, okay, guys? So in case you want to improve and get better, also compound your account, whatever, just make sure to check the link below. Okay, guys, let's continue. So with a little drawing, let me show you again what is a liquidity level. Usually you're gonna have some lows, okay, and then price is gonna make a fake out and it's gonna go into the opposite direction. Okay, guys, so as you can see in this previous example that we were looking at the support in gold, this was a liquidity grab, and as you can see, price went into the opposite direction for a significant amount of pips, okay, guys. And we take this was our support, but now this can be a liquidity level. We had this huge wick, okay, taking all the liquidity from this level, and now it's pushing price up, okay. So that is a liquidity level, and that was support and resistance. Okay, now let's talk about the zones. Now, okay, so a zone is very different from a support and resistance because you don't need to have a pretty obvious support and resistance level or a significant high or low, okay, guys. So a zone, it can be a candlestick, okay, and whenever price comes back into that area, okay, so let's say for example you have price ranging and then suddenly you have like a huge drop, like a significant drop, it's going to be pretty obvious in your chart, okay. Whenever price comes back into that spot, it's going to react, okay. So it's going to be usually, as I said, usually it's going to be as the name says, it's a zone, but it's going to be a candlestick, okay. So now, for example, this is Nasdaq, and as you can see, we had a liquidity level, okay, being taken. But if you go into a lower time frame, we're going to identify a pretty notorious zone, okay. And as I call them in my previous videos, I explain exactly these zones. They're called FTRs, okay, guys. So now also it's very important to mention that these zones, they also have to be respected, okay. So remember, liquidity levels, they can be pierced through, these don't, okay. So it's very important that you understand that these zones, they should be respected by price. As you can see in here and also in here twice, price respected and rejected this zone. It was actually from the edge of the zone and it reacted immediately, okay. So in here you could have profited at least 3 times, okay. And yes, they can be tested multiple times. So think about it, like in these zones there are some orders, okay. So As I said before, banks and institutions, they're trading hundreds of millions of dollars, but in one single transaction is impossible to fill all of those trades. Okay, guys, so what happens is that price is going to come back, take some more of those orders, and eventually react. Okay, so as you can see in here, price came back as a magnet into this zone. Okay, as remember that I said that the zones are going to be in a significant move. Okay, and price is going to come back to a level, and which is that level? The zone. Okay, now the zone, as you can see, it's represented by this candle. Okay, and eventually it reached its final destination, which was this low. Okay, now let me show you another example. This is actually a real life trade example. So as you can see, guys, to the left we had a liquidity level, right? So this was a fake out. As you can see, price closed back inside the range. Okay, so as you can see, liquidity levels and zones, they can happen in the same environment. Okay, guys, so I think you already identified it by yourself, right? Let me remove this entry. Okay, so this was showing that it was a liquidity level being taken, and I think you already identified by yourself. Okay, this was the zone. So I switch into the 5-minute chart. As you can see, this red candle was the last candle before this move up. Okay, right after this fake out happened, we had this red candle, and as you can see, it acted as a zone, and eventually price just kept going up. Now let me show you some other zones that appeared after we had the confirmation to the move up. Okay, guys, so as you can see, there was another zone being created. Okay, and remember what I said, the zones are going to be respected. Okay, there was another zone right here, which was this candle, and it was respected. Okay, and price just kept going up and up and up. Okay, so that was the difference between support and resistance, liquidity level, and your zones. You're gonna start applying them anytime now. You can go into your charts, do your homework, and just come back to this video and let me know how it goes for you. Thank you for watching, and see you on the next video.